Welcome back to XRP Daily Brief, your trusted channel for clear insights into cryptocurrency and finance. Today we have a very important topic because Ripple has just completed a huge acquisition that could change the game for XRP and the crypto industry. This is not just another news story. It is a strategic move that may reshape how businesses use stable coins and blockchain technology. Before we dive deep, I want to thank everyone who supports the channel by liking videos and subscribing. Your support allows me to bring clear analysis that you can actually understand and use. If you are new here, welcome. On XRP Daily Brief, I simplify complex crypto news so anyone can follow along. And today's topic is a perfect example of why understanding the fundamentals is so important. Ripple's latest acquisition is called Rail. And while many people may not have heard of it, it is actually the largest B2B stablecoin payments provider in the crypto space. Rail helps businesses send stablecoins across borders quickly and reliably without having to deal with complicated blockchain setups, private keys, or multiple wallets. Most businesses simply do not want to manage all those technical details, and that's where Rail becomes essential. By acquiring Rail, Ripple is bringing real adoption into the XRP ecosystem. Businesses that were already using Rail will now operate on the XRP ledger, which strengthens the demand for XRP and shows the practical value of the network. This is a huge step because adoption is what drives long-term success. Many investors focus too much on price charts, pumps, and hype. But the real value comes from utility and infrastructure. Ripple is building that utility carefully, step by step. Rail gives them a ready-made system that already has business clients using stablecoins for payments. This is similar to what Amazon did in its early days. Amazon proved the value of e-commerce by selling books, but they always had a bigger plan in mind. Ripple is showing the world that XRP can handle payments and settlement. But their ultimate goal is far greater. They are positioning XRP as a foundation for a wide range of financial services, from custody and liquidity management to cross-border transactions and tokenized assets. This acquisition demonstrates that Ripple is focusing on real-world use cases that are already working, rather than relying on speculation or marketing hype. Institutional adoption is another major factor to consider with regulated XRP ETFs. Now active, investors can easily access XRP without managing wallets or private keys. This opens the market to a larger audience and brings in more capital from people who may have been hesitant before. The combination of these ETFs and the Rail acquisition creates a powerful ecosystem where both businesses and investors are driving adoption at the same time. It is important to remember that real financial revolutions usually start with businesses and institutions, not everyday retail investors. Large companies adopt new systems first, build the infrastructure, and then individual users follow. Ripple understands this and is strategically targeting companies that are already ready to adopt stablecoins and blockchain payments. This gives XRP a strong foundation for future growth. Right now, the XRP ledger is positioned to handle more transactions, provide liquidity, and support business adoption at a scale that very few cryptocurrencies can. As more companies move their operations to the XRP network, demand for the token itself will increase naturally. This is not hype. This is real adoption driving value. Over the coming months and years, Ripple's strategy may prove to be one of the most important factors in the overall crypto market. Investors often focus on short-term price fluctuations, but understanding these strategic moves gives a clearer picture of where XRP could be heading in the long term. Rail is just the beginning, and Ripple's acquisitions, partnerships, and regulatory clarity all point toward a future where XRP is a critical component of the global financial system. For anyone holding XRP or looking to understand crypto adoption, keeping an eye on these developments is crucial. We are witnessing the foundation being built for a much larger financial ecosystem where XRP plays a central role. As always, Patience, understanding, and knowledge are key to making the most of this opportunity. And today's news highlights exactly why. Staying informed is so important. Let's talk about how this affects XRP from a market perspective. Many investors focus only on short-term price movements, but the real story is in adoption, infrastructure, and institutional involvement. XRP is currently seeing strong interest from institutions, not just retail investors. Grayscale, Bitwise, and other major asset managers now hold a meaningful portion of XRP's market capitalization. And this is just the beginning. The launch of XRP ETFs has unlocked capital that could not easily enter the crypto market before. People who wanted exposure to crypto but did not want to manage wallets, private keys, or risk losing funds now have a safe, regulated way to invest. These ETFs make it simple for anyone to get involved, and the demand has been clear. Inflows into XRP ETFs have been consistent, and we are seeing record amounts of money coming into these funds. This is a strong signal that XRP is not just a short-term trade, but a long-term investment for many participants. Institutions and new investors alike are recognizing the utility that Ripple is building. Rail shows that XRP can handle real-world payments, while ETFs show that XRP can handle traditional investment demand. The combination of these two forces is powerful and rare in crypto. Many coins claim to have utility or adoption, but few have both real adoption and regulated investment access at the same time. This is what sets XRP apart. Looking at the XRP price chart, some people are worried because the market has been relatively sideways for months. They see inflows into ETFs, the acquisition of Rail, and positive news, but the price does not seem to move aggressively. It's important to remember that sideways price action is often just accumulation. Smart investors and institutions are using this time to gather XRP at reasonable prices. In history, some of the biggest moves in crypto came after long periods of consolidation. XRP is currently in one of these phases. Retail investors often panic during sideways trading because they measure success by short-term gains, but institutions focus on long-term positioning. They don't mind waiting because they understand the larger market trends and adoption. The pattern we are seeing in XRP is similar to previous major bull runs. There is an initial rise, a consolidation phase, and a gradual building of momentum before the next explosive move. Historical charts show that this is exactly what happened in 2017. And while past performance does not guarantee future results, patterns in adoption and infrastructure give us strong reasons to be optimistic. Ripple is building a complete ecosystem for stable coins, payments, liquidity, and financial services. And this is happening quietly behind the scenes. By the time the wider public realizes the value, much of the supply will already be in institutional hands or committed to long-term use. This is why it is so important to focus on adoption and utility rather than only price. Another key factor is regulatory clarity. With Paul Atkins at the SEC and supportive frameworks being established, Ripple now has an environment where institutions can confidently enter the market. This was not always the case, and many investors were hesitant because of regulatory uncertainty. Now with ETFs, acquisitions like Rail, and regulatory progress, XRP is positioned to be a leader in both adoption and investment. In summary, XRP is not just another cryptocurrency. It is part of a growing financial infrastructure that is being actively built by Ripple. Institutions are accumulating, adoption is increasing, ETFs are attracting new capital, and the market is quietly preparing for what could be one of the most significant moves in crypto history. Sideways trading is normal during this accumulation phase, and it should not cause panic. Understanding these dynamics is crucial for anyone who wants to stay ahead in the market. The combination of real-world adoption through Rail and investment adoption through ETFs makes XRP a unique asset in the cryptocurrency space. It is not about short-term excitement. It is about long-term positioning. Investors who recognize this will be in a strong position as the market evolves. Patience, awareness, and understanding adoption trends will be key to navigating the next phase of XRP's journey. While retail investors often chase short-term gains, institutional investors are building a foundation for the long term. With the XRP ETFs in place and acquisitions like Rail, the ecosystem is now more attractive for large-scale players. This is not just about small inflows or minor adoption. It is about creating a market where XRP becomes a key financial asset used by businesses, banks, and investment funds. When we look at the inflows into XRP ETFs, we see consistent growth, which indicates strong confidence from investors who are seeking both stability and exposure to crypto. ETFs remove much of the risk and complexity associated with direct crypto ownership, which opens the door for a huge wave of new capital. This inflow is further supported by Ripple's infrastructure initiatives. By acquiring Rail, Ripple ensures that real transaction volume will flow through the XRP ledger, strengthening its use case. This combination of practical adoption and investment access is rare in the crypto market, making XRP a unique asset. Historical patterns also give us some insight. XRP's past movements show that periods of sideways trading often precede major upward runs. The market is currently consolidating, absorbing new supply, and allowing institutions to accumulate at favorable levels. Many retail investors may feel impatient because they do not see immediate price spikes. But understanding market cycles is key. The sideways trading is not weakness. It is preparation. Retail investors often get shaken out during this phase, leaving the market mostly in the hands of those with a longer-term view. Another factor supporting XRP's growth is the regulatory environment. With leadership changes at the SEC and supportive policies being implemented, Ripple now has clearer guidance for institutional participation. Regulatory clarity reduces risk and allows institutions to confidently commit large sums of capital, which can drive liquidity and demand. When companies and financial institutions start using XRP for actual payments, liquidity, and settlements, the demand for the token itself naturally increases. It is important to recognize that XRP is not just a speculative asset. It is becoming a functional layer of the financial ecosystem. Many investors fail to appreciate the scale of this adoption because they are focused solely on price charts. While price is important, utility, adoption, and infrastructure are what drives sustained long-term growth. The Rail acquisition is especially critical because it brings an already active payment network into the Ripple infrastructure. This means businesses using stable coins through Rail will soon interact with XRP, increasing transaction volume and cementing XRP's role in the financial system. Ripple is essentially creating a self-reinforcing loop. More adoption leads to more usage, which attracts more institutional and retail investment, which then encourages further adoption. Over time, this cycle could result in significant upward pressure on XRP's value. Price charts alone cannot show this effect, but understanding these dynamics gives a clearer perspective. Investors should also note that the crypto market has historically shown explosive growth after periods of consolidation and accumulation. XRP has demonstrated this pattern before, and there is reason to believe a similar scenario could unfold again. The current accumulation phase, supported by ETF inflows and business adoption, sets the stage for the next potential bull run. Patience is key. Those who panic or sell during consolidation periods often miss the big gains. Conversely, those who understand the strategy, the adoption trends, and the institutional positioning are better equipped to benefit when the next major move occurs. In short, XRP is entering a phase where real adoption, strategic acquisitions, and regulated investment opportunities converge. This combination is rare, powerful, and likely to influence both short-term and long-term market behavior. Keeping an eye on institutional flows, ETF performance, and business adoption will provide a better understanding of where XRP is headed, rather than relying solely on daily price movements. Investors who grasp these fundamentals are more likely to make informed decisions and avoid the panic that often comes with sideways trading. XRP is not just another cryptocurrency. It is evolving into a foundational financial asset, and understanding the dynamics behind it is essential for anyone serious about crypto investing. Many people are watching the charts closely, expecting immediate gains after the rail acquisition and ETF inflows. But it's important to understand that adoption and infrastructure often take time to reflect in price. XRP has been consolidating, trading sideways, and some retail investors are frustrated. However, this sideways movement is normal in any growing market. It is a period where institutions accumulate, supply is absorbed, and the market prepares for a potential breakout. Historical data shows that XRP has gone through similar phases before major upward runs. For example, in 2017, XRP experienced an initial rise followed by a correction, and then a period of sideways trading before a massive bull run. We are currently seeing a similar pattern with accumulation and minor fluctuations at key price levels. This is actually a positive sign because it shows stability and healthy consolidation. Retail investors often misinterpret these sideways periods as weakness, but in reality, it allows smart money to build positions and prepare for larger movements. The combination of ETF inflows and the rail acquisition is also significant. ETFs attract capital from investors who may have been hesitant due to risk or complexity, while rail ensures real-world utility and adoption of XRP. Together, these two factors strengthen both the financial and operational foundation of the token. Another point to consider is the broader institutional involvement in the crypto market. Major financial players such as BlackRock CK, ARK Invest, and other investment firms are signaling strong interest in digital assets. When institutions increase their exposure, it creates liquidity and demand that often leads to price appreciation over time. XRP, being the most connected and regulated coin for enterprise solutions, is positioned to benefit from this trend. Regulatory clarity is also a game-changer, with supportive leadership at the SEC and the advancement of frameworks that encourage innovation while managing risk. Institutions are more comfortable entering the market. This reduces uncertainty and increases confidence in XRP as a long-term investment. Price may not always move in a straight line, and temporary volatility is part of the market. But understanding adoption and institutional flows provides a clearer picture of the trajectory. Many retail investors panic during sideways trading, selling out of frustration. However, those who focus on the fundamentals, understand the long-term strategy, and stay patient are usually the ones who benefit most when the market moves strongly. The analogy of Amazon is also relevant here. Just like Amazon used books to prove the value of e-commerce before expanding into other markets, Ripple is proving XRP's utility through cross-border payments and stablecoin adoption. Once this proof is established, expansion into other areas like liquidity management, custody, and tokenized financial services becomes much easier and more valuable. XRP's consolidation is like a quiet preparation phase. The market is digesting news, absorbing supply, and allowing long-term investors to build positions. Sideways trading is not a reason to panic. It is a natural step before the next upward movement. Another factor to consider is the psychological behavior of retail investors. Many investors feel impatient when price does not move dramatically. They forget that crypto markets are volatile and often go through periods of accumulation and slow growth before explosive moves. Those who sell too early often miss the major gains. Institutions, on the other hand, see these phases as opportunities to accumulate and prepare for future demand. XRP is uniquely positioned because it combines real adoption, institutional interest, regulatory clarity, and infrastructure growth. This makes it more than just a speculative asset. Understanding these fundamentals is key to making smart investment decisions and staying focused during periods of consolidation. In conclusion, XRP's sideways trading is a healthy phase in the market. Institutions are accumulating, adoption is growing, ETFs are bringing in new capital, and Ripple's infrastructure initiatives, including the rail acquisition, are strengthening the ecosystem. Price may not always show immediate gains, but the foundations being built now will support long-term growth and potentially massive upward movement in the future. Patience, knowledge, and understanding of adoption trends are crucial for any investor. Ripple's strategy is becoming clearer with each acquisition and ETF launch. The rail acquisition positions XRP as a practical solution for real-world payments, while ETFs provide an accessible entry point for new investors. Together, they create a strong ecosystem that combines adoption, liquidity, and investment. Many investors focus only on price, but the true story is in adoption and infrastructure. XRP is not just a speculative coin. It is becoming a core component of the future financial system. Institutional adoption is growing steadily. Major firms and asset managers are accumulating XRP, taking advantage of the current consolidation period. They understand the long-term potential and are prepared to hold through sideways trading and minor volatility. This accumulation sets the stage for significant price appreciation once broader adoption occurs. Sideways trading is often misunderstood by retail investors who may feel frustrated when prices do not rise immediately. In reality, this is a healthy market phase, allowing smart investors to gather positions and prepare for the next move. The pattern we are seeing today resembles historical bull runs in XRP. There is an initial rise, a correction or consolidation, and then a buildup before explosive growth. This cycle is normal and necessary for sustainable market development. Regulatory clarity is another crucial factor. With leadership at the SEC supporting innovation while managing risk, institutional investors feel more comfortable entering the market. Regulatory guidance reduces uncertainty and encourages long-term participation, which strengthens demand for XRP. Furthermore, Ripple is not stopping at payments. They are expanding into liquidity management, custody, and tokenized financial services. This broad adoption strategy makes XRP essential, not only for crypto investors, but also for businesses and financial institutions. When companies start using XRP for payments, liquidity, and settlements, demand naturally grows, which supports price stability and long-term value. Another point to consider is retail behavior. Many retail investors may sell during periods of sideways trading due to impatience or fear. However, those who focus on fundamentals, adoption trends, and institutional positioning are likely to benefit the most when the market eventually moves higher. Understanding these dynamics is key to making informed decisions. XRP's position in the market is unique. It has real adoption through rail, investment adoption through ETFs, and institutional support backed by regulatory clarity. Few other cryptocurrencies have this combination of factors. This makes XRP a strong candidate for sustained growth over the next several years. The potential for massive upward movement exists because the market is still early in adoption. Many retail investors have yet to recognize the real utility of XRP, while institutions are quietly accumulating supply. This scenario often precedes significant price appreciation. It is also important to remember that crypto markets are volatile. Short-term price fluctuations should not distract from the long-term trend. Patience and understanding of market cycles are critical. Those who remain focused on adoption, infrastructure, and institutional involvement are positioned to benefit when the next major move occurs. In summary, XRP is entering a phase where real adoption, strategic acquisitions, ETFs, and institutional participation converge. The rail acquisition is a key part of this ecosystem. ETFs are bringing in capital, and regulatory clarity reduces risk. Price may move sideways at times, but the foundations are being built for long-term growth. Retail investors should focus on the fundamentals rather than panic selling during consolidation. XRP is not just a cryptocurrency. It is evolving into a critical financial asset for the next generation of finance. By understanding adoption trends, infrastructure developments, and institutional flows, investors can make smarter decisions and potentially participate in one of the most significant movements in the crypto market.